Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Rivian Automotive. Now, for those of you that don't know what Rivian is an electric car manufacturer. They have two cars, they have a truck, and they have an SUV. The overall idea of Rivian is electric vehicles. They want to compete with virtually every car company out there right now because there is so much competition in the electric auto space right now. So we're going to be talking about should you buy Rivian, and we're also going to look at a couple other electric vehicle stocks so you guys can compare and pick the best electric vehicle company out there. So I hope you guys enjoy it. If you guys get anything in value out of this video, make sure you guys hit that like button, subscribe to the channel. If you have any questions, concerns, make sure you guys ask them down below. And guys, if you want to learn more about investing, check out my course and check out my merch for fantastic investor merchandise. So looking at Rivian, you can see where the stock pretty much went from this 109 mark all the way up to $180. Now, during this time, this was pretty much the IPO of this stock, right? Within the first couple of weeks, this is what we call an IPO breakout. Pretty much when a whole bunch of investors kind of go, oh my gosh, this is going to be the next Tesla. And we have a lot of buying pressure comes up. Then kind of people realize, okay, well, this company is worth more than Ford, GM, all these other companies, and the company doesn't make any money. So we kind of had this sell-off, right? And anytime you have a sell-off of this nature, it's kind of expected. Anytime a stock pops up this much this quick, not to mention a whole bunch of stocks during and around this time were very overvalued, even at their IPO launch. So ever since then, we've seen this pretty much this slow and steady downward trend in the stock, which was definitely very expected and I think long overdue. Stock went from 180, fell all the way down to as low as about $50 a share. Okay, so that's about a pretty average price for this stock. Okay, now recently we've seen consolidation. So anytime you have that IPO, normally within the first couple of months, you will start to have consolidation. And this is just kind of when more realistic prices come out. And this is the best time for beginners, for people to start swing trading the stock. The reason why is because it's not heavily invested. A lot of the volume kind of calms down, and all those things. So looking at it, just some basic technical analysis, right? We have some resistance right here at about I would say $67 a share. So pretty much what this means is this is the hardest for the stock to break above. As you see, almost every single time it hits it, it just has a lot of selling pressure near there, which is very common for stocks, especially of the downward trend of Rivian. Now, support on the other hand, this is the best opportunity to pick up some shares of Rivian. So for me, I definitely think near and around this $52 mark is by far the best opportunity. As you can see, it hit it several times, one here, classifying very hard support. We do have a little more support right here at about this $57 mark. So what I would do, if I were you guys, I would classify the support for this stock from $56 all the way to $52. So right in this range would be kind of when I would start looking at it, maybe start, investing as the stock is continuing down if we get sell off here. And if it continues to sell off, understand and just set your stops below the 50 mark. So if it continues through that point, you sell off, you cut your losses early, but if it hits that, it turns up, you have shares and you can make a lot of money. So now answering that main question of should you buy Rivian, I definitely think Rivian carries a lot of potential, just like any other car company, any other electric car company out there. But the thing is one, Rivian is not profitable. So anytime you invest, a company that's going to be profitable is going to have more money to invest into other things and make high quality cars. And at the end of the day, that's really important. And not to mention, if we look at this is pretty much their balance sheet. So what this is kind of all the nitty and gritty parts of Rivian. Looking at it here, you can see they do have about $5 billion in cash, which is fantastic. And they have only about, I believe, around $2.9 billion in debt, which is very good. Actually, for a company of this nature, having less long-term debt than cash on hand is very strong. The reason why is if we ever go through a tough time, Rivian's going to have $5 billion to pay off its debt, continue to grow the business, and things along those natures. The things that I don't like is this, the margin. The company does not make any money, and at the end of the day, that is one of the most important things for investing. So I definitely think as you compare it to other car companies, a company like Ford, look at the difference of charts, right? This one right here, as you can see, is a little different, but if we actually zoom out, you can see the difference. We have a beautiful upward trend. Comparing it to Rivian is straight sell-off. I'll move myself so you can see it a little clearer. As you can see, we just have straight sell-off. Looking at Ford, great growth. Looking at Neo is definitely more volatile. As we zoom out, you can see we still have, a general upward trend. It is a little more volatile, as you can see with that sell-off, but we still have that upward trend, which is decent, right? That's probably the middle ground. But by far the best electric car company out there is this. It's Tesla. Great numbers, great growth. And the thing about it is we've seen so much sell-off from Tesla. It hit lows all the way to $600 in the past, couple of weeks, which always brings so much opportunity to pick up Tesla at a very fair point. But I definitely think if you're having a hard time determining, Carter, should I buy Tesla? Should I buy Rivian? I want to invest in the general sector? The best thing that I would recommend is just go with the ticker symbol DRIV, right? This one here, you get a whole bunch of fantastic holdings. You're not going to have as much growth as companies like Tesla or even Ford, but the overall idea behind it is you're going to be investing in the sector. So it's gonna do very well. It's going to be a little more volatile, but overall it's going to have that growth of the electric auto space, which I think is the biggest and most important thing for people looking for stuff like this. But if I was going to have to choose between Rivian or Tesla is the front runner, right? They're pretty much the Apple of phones. Everybody looks to them to see what they're doing before they make their move. Rivian is a startup, right? This is a smaller company. It's a high risk, high reward play. I wouldn't go crazy with your investing. I definitely would keep it under, 2% of your portfolio. So what that means is for every $100 you have invested, I wouldn't put more than $2 into Rivian. And that's my opinion, guys. So I hope you guys enjoyed it. If you did, hit that like button, subscribe. Don't forget, you guys can sign up with Moo and get a couple free stocks. So make sure you guys check that out too. So we will see you guys later. Remember to stay happy, guys. Stay positive. Stay safe out there. Take care.